See you. Sandra,
Here.
Mike, I'm here. Scott, you're here.
Where's Katrina?
So the agenda is really,
Katina? I can't say.
she was here. She said I saw her last night. She was going to come down, she said, so. But for now, she's not. So the agenda is really three items. The first one is we'll go over the financial report for year end. Of course, we'll be having the audit during the month of January, so there might be some adjusting entries, but probably nothing significant based on what I've seen. There were a few adjusting entries that were processed in December, but I'll ask Sandra to confirm that and see if there's anything else.
Here she is.
There's Katina. Present. She's present now. So Katina is present.
I was waiting for the elevator, but I started walking down the stairs, but then have to go outside, come back.
Oh, my word.
So then I was going to ask Scott what the next steps are for the audit, essentially. So those were the three items on the financials for year end. The second item on the agenda, there's been a few emails circulating on the reserves and reserve studies. So I wanted to have an open discussion on that with the committee. But before the committee discussion, I've asked Sean to be here. He's got some ideas and comments and feedback that we'd certainly like. And Brooke said he was going to be here, so I was going to ask him as well. Brooke, you're on online?
His mic's off.
Okay, your mic's off.
Correct, I'm online. Thank you.
Then I'll give both you and Sean a few minutes to recap your positions and what your ideas are, more importantly, and then we'll discuss that at the committee and see what and come up with next steps for that.
We've had two meetings that weren't recorded. Can I just verify this is going to be recorded?
I believe it is being recorded.
Yeah.
It says recording on the screen here.
Okay, just checking because there've been two errors, and I understand errors happen.
Yeah.
No, Brooke, I heard that it's recording when I joined.
Thank you.
Okay, thanks for confirming that, guys. And the third item on the agenda is any other business, if we have time, because we normally run out of time. But I'd like to discuss maybe the role of the Finance and Insurance Committee. We're going to get a new board within the next week or two. And from my personal opinion, I think we're providing value, but I think we can provide a lot more value as well to the association. So I'd like to have a discussion on that. So with that, I've asked Scott to bring up the treasurer's report. Well, as he's doing that, essentially what I can say is high level. If you look at the income statement, the balance sheet, and the reserve, we're pretty much on plan, or we ended 2024 on plan. Revenues were 248,000 higher than budget, and that was essentially because of the interest revenue we generated. Of course, the expenses were, I think, 54,000. I'm going off top of my mind here. 54,000 lower. That came really from two areas. One area being insurance, which was lower than our budget for 2024. I say 2024, 25. I live in the past. And so our insurance was lower, and salaries, I think, were 24,000 lower. That got offset, not all of it, but a great deal of it, by legal fees, which were higher because of litigation, because of some derivative settlements and cases, and professional services. There you go.
Report, you just scroll up and down and expand it. There you go.
Yeah, so our revenues were 7.1 million. Our actual budget was 6.8, and like I said, 246,000 variance was entirely due to interest revenue for cash we have on hand. From an expense side, our total operating expenses were 4.7 million. The budget was 4.8. So we underspent by 65,000. And that came 223,000 from insurance, 24,000 from salaries, taxes, and benefits, and offset by a loss of or an overspent of 186 on administrative costs. And that was essentially legal was 84,000 higher than the budget. And, all I can say on that is the owners, the board, the finance committee, we all have to do a better job of trying to minimize litigation, legal fees, and what have you. It's a lot of money we're spending. There's valid reasons for that, but nevertheless, going forward, we have to find a way to reduce those expenses. So the financial report is on the screen now. Professional fees, 47,000.
Mike, sorry, a quick question regarding this fee. Is it because it's payouts or is it because it's legal fees, literally paying the lawyer?
It's both. Both. There was a payout and there are the legal fees for the litigation, but also legal fees related to contract reviews, stuff like that, administrative and what have you. So there's opportunities for governance and what have you.
Thank you.
All those resolutions.
And that's why I was saying
amendments.
before, we all have to do a better job. And I think we can find a way to contribute, and maybe the finance committee can review some of the stuff before it goes to the lawyers. So they spend less time reviewing it and really reduce the bill. Now, the other thing we have to do is try to avoid litigation. We have to find a way to settle things amongst ourselves, and because we tried. I know, and I'm not. This is certainly not a criticism. I know we've tried; it didn't work. But let's put focus on it. And part of the role of reviewing these numbers every month is exactly that: to put focus on some of the areas, and then for us to take some actions or be more proactive.
But those litigations were carryover from
Yes.
5 years ago.
The good news, like you say, has
It's not-
good news
not-
is
Nothing recent. It was just carryover
The good-
from 5 years ago with the same issue we had with that.
and the good news is they're settled. So hopefully all this water's under the bridge and we start a bit further.
SCAP lawsuit. It's right now because of bankruptcy. It's being held, but it's being appealed. So we're really not over. So we will have attorney fees.
Well, yeah, I mean, we budgeted 35,000 for
Yeah.
the appeal. I mean,
Yeah.
the fixed fee.
But I mean, I think the appeal is in limbo right now because of the
Bankruptcy.
So in essence, we planned on using 165,000 of our, owner's equity, which is money just sitting around in the bank accounts. We wound up just using, 100,000.
Yeah. So
65,000.
65, yeah. So all in all, pretty good. Just additional comments and administrative there. Professional fees are higher, not because they're higher necessarily, but we've decided to expense more than we've capitalized against the projects. So that's one reason, and that's not a bad thing from an accounting point of view. Of course, there's income taxes of 42,000. That's on the interest revenue. You make money, you have to pay taxes. Yeah, the variance is 42,000 because I think we had budgeted some.
Plus a good portion of that interest income just goes into reserves. So
So
it didn't really offset, it didn't have an effect on the.
not on the operating
on the
budget.
Operating budget.
Yeah, so if you look at the next line, SERS and non-SERS reserve fund transfers, our actual is 2.287. Our budget was 2.04. So we contributed more to the reserves because of that interest income of 246 or 48,000. So all in all, 2025 December year-to-date actual members' equity, there was a gain of 54,000 there. 64.
60.
So that's the income statement. Any comments or questions on that before I move on to the balance sheet?
Another role that the finance committee can play, which I've been doing, is to look over our investments, our T-bills when they mature. How, are we gonna roll it over into a 2-year T-bill? I mean, we got to do cash flow projections for our projects and try to maximize the high interest rate environment now. So that would be a big help if we work together on that.
Okay, great.
Here, you need to see better
Yeah.
the screen.
Really have to
You can
question.
expand that. You can't expand that.
Cash flow we
There we
would
go.
without.
Can you see?
Yeah, I can see that. Okay, great.
Scott's expanding. That's good. Thanks, Scott.
next slide.
Next slide, please. So the balance sheet for those who aren't accounting experts, there are 3 elements to it. What we have in terms of assets, what we owe in terms of liabilities, and what's the difference between the two is what equity we have in this building. So if you look at December 2025, the balance of assets was 11.6 million. Of that, 11 million uh, 11 million was cash. So 11.5, I think. And that's made up of three accounts: our operations account, our special assessment account, and the SERS and non-SERS reserve account. So those were almost $1 million in operations, liquidity of 2.5 months. Special assessment, we have 3 million, almost $3 million there, and 7 million in SERS and non-SERS. These are the cash accounts. Receivables, 55,000, it's lower than last year. And prepaid insurance is 554. So total assets, 11.6. Liabilities, insurance payable, we have, 4 months, 5 months of payables there, because our policy ends December, May 31st. Deferred revenues, 380,000. We have prepaid assessments going in there. Some people have paid their assessments in advance. And general accounts payable and accrued expenses of 266. Then the three reserve accounts and the special assessment fund balance, we have 2.9, almost $3 million. And we'll get to these on the next slide. The SERVS reserve fund, we have 5.4, and the non-SERVS 1.7. So for a total of 11,130. The difference between total assets of 11.6 and 11,130 is 516,000 in equity. Any questions or comments before we move on? Okay, Scott, next. All right, so these are the three reserve accounts we have and what we have in balance at the end of December 2025. So the first column on the left is what we had in balance at the end of 24, the activity during the 25 period, and the cumulative year to date as at December 31st, 2025. So I'll just look at the total for special assessment. We ended 24 at almost 4.8 million. We transferred in 1.8 million of, spent 1.8 million. So we're left with 2.9. We did not contribute any additional money there because that was a special assessment that had been contributed in previous years. And you look at the project budgets for those three elements, the concrete restoration, I've included the contingency in there, is 4.45. Our contract was 4.6, so got about 150,000 gain. And I assume all the expenses are in for that.
For concrete restoration, yes.
Okay, so we saved 150 against the contract. Elevator modernization, that one's still in a state of flux, I guess, depending on negotiations and activities and whatever penalties and everything else there. But we're sitting at almost 2.2 million in spending. And I didn't see, Scott, some emails indicating that there were some credit notes that had to be applied. I don't know if those are in there or not. Well, they don't issue credit notes, but some money they owed us. And
Yeah, that's gonna go towards the,
Balance.
I know reconciliation, I guess, right?
well, two different things. On the modification project and then also on the operating side as far as their quarterly maintenance or their quarterly billing on the maintenance of the elevators. They've been having a huge issue billing with that, so.
And why could that go into special assessment, not in the operations?
I'm sorry?
Why couldn't it go in the operations?
Well, because the elevator modifications coming out of the special assessment account, right? But then the maintenance they perform on our elevators, we get, that's an operational expense.
Operations, and
Yeah.
shouldn't that be in accounts payable already or accrued expenses?
We're accruing expenses for the
Yeah,
service
it's coming
contract.
out of
So
there.
it's not.
It is.
But what they did is they got a little cute, and started billing us for the elevator repairs that they didn't really, they didn't deliver 100% working elevators, and they started already billing us for maintenance contracts, and they just forgot about the warranty period. And the clock's supposed to tick when they deliver 100% working elevators, not when they're not complete.
Mhm.
So in our operating budget for 26, will there be an upside in terms of whatever credits are going to be applied there, or has that already been factored into the numbers for 2025?
No, so the credits haven't been factored in.
Okay. So-
Again, we're still factored in.
Okay.
Again, we're still accruing for
The expense.
Yeah.
Yeah,
So we should see a benefit, we should see a favorable benefit in 2026 because of that.
yes.
Okay.
it might go towards, they might deduct, I mean, it might just come off the contract. No one knows.
We should keep the operating expenses
Mhm.
separate in the operating budget. And then if we have underspent the contract, then it stays in the
Yeah,
services.
we just have to figure that out and ask Scott, can we take some from here? and put it there?
I think we're okay to 12/31/2025 in the financials once you make.
I'll make sure any credit that's supposed to be applied towards the service side is applied to the service side and not to the
Correct.
Yeah.
modification project.
That's what we're saying.
How long is the contract with the elevators? With TKE, I'm assuming?
What was the question?
The service contract,
Yeah.
I believe when the modification during the contract negotiations for the modification project started, there was a new contract issued, and I think it's only a year-to-year contract.
So I just want to point it out. So that means that if in a year from now we decide to cut ties with them, all those credits that would come in possibly will not come in. So it's possible they'll keep us on the hook trying to connect to them or trying to work with them because they're still going to owe us credits.
We're not paying.
Because those credits are gonna come off the balance that we owe.
Yeah, we
Oh,
have,
so we still owe him money for the elevators.
We're on 80%.
500 plus.
yeah, we're at 80% of the contract, right? So paid. So we're still holding 20% and there's going to be a final reconciliation. So if they're not the ones providing the service in 2026, then we'll hold back on that.
Perfect, thank you.
That money that, we're getting on
Well,
the.
the warranty's just 1 year.
side, knowing that that's that special assessment account and
3
we
years?
already assessed for the roof. So.
Yeah, for
I
1
know we
year.
get mixed accounts, but that's the special assessment account. Can we move the money into?
Yeah,
the roof now?
we were talking with Sandra and Heskey before the meeting. Any gains in the special assessment, we'll have to vote on them, but they can be transferred to SERS or non-SERS and what have you.
Okay, you do work.
Yes, so that's the idea, to transfer it to non-SERS.
We have, so whatever is left, how much do we have in our?
Well, we spent 2.167 and the contract was for 2.7. Now, I don't know what the final settlement will be, but I don't know how much you guys are gonna save, but whatever. But if you look at all the special assessment, we're at $3 million. Right? in the
1.6
balance.
for the roof.
So 1.6 for the roof, you have to
It's like
deduct that.
1.7.
So,
And, we owe PKE 500,000, but we're hoping to get back some liquidated damages of 220. So, with some adjustments for the service contract. So,
we might be close to.
so we're gonna have like 220 from the elevator side.
Yeah.
That's 600-700.
We
Yeah, 6,
do
700.
have to wait until all these projects that's in the special assessment close before we can vote and transfer
So
the
we
money.
can't throw that cooling tower in as part of it because we're doing.
Not right now,
Right,
no.
because I know, I was just curious how, if we could move the money over because we need it because it's quite expensive.
Well, we have enough cash, so that's not a concern at this point. So by the time we start spending money there, or doing the project and spending money, these projects should come to a close
Yeah,
with the
and,
exception maybe of the roof. I don't know how long that's
Yeah,
gonna take.
it's a fixed contract. We don't expect much.
So we're gonna be getting billed in phases too. It's not like they're
Right.
gonna want $5 million up front.
So, because we're gonna simultaneously start the cooling towers at the same time, where would that come from then? Because,
Well, we have money in the non-SERS account. Yeah, we have money there, so.
And we can also ask them to weigh the HVAC risers a little more than they would the cooling towers. So it's
Yeah,
very
I mean,
valid.
we're months away from the
Yeah.
cooling towers starting.
Yeah, plus we're redoing the reserve so that depending on what answer you get there, this whole thing is gonna look totally different because if we expect the reserves to go up, then we might have a deficit to start out with.
Well, based on what I see, I don't see any deficit. I think, you know what? Based on this, we're in pretty solid financial position here and we have flexibility. So that's all you can ask for.
We had some flexibility, but I was just.
Yeah, in 6 months, I mean, the roofing is starting, in 6 months will be over. So we'll be able to transfer that money in 6 months.
The rest of it
Another
about,
million in 2026.
but I think we're.
No, it's a Sears. Sears is collecting.
Maintaining our budgets,
I mean,
and
non-Sears.
so I think what we have to work with.
Well, look, at the end of the day, if you're close to your budget, it gives you confidence in the numbers. And if you have flexibility, that's all you can ask for. Those are two. Let's not over.
Mike, I have a
let's-
quick question if it's okay.
Yeah, go ahead, David.
Sorry. So I see the project budget, let's say, for example, for concrete restoration is almost 5, and then the year to date is 4.5. How do we get the numbers for the budget? Is it whatever the contract was signed for initially, and that's what we collected money for, and then somehow miraculously became cheaper? Or like, why is there a discrepancy in those numbers?
So if you look at that, David, the project budget was 4.9 million. The actual came in at 4.4, and the contract was for 4.6. So when we established the budget, the contract wasn't available. So we had different quotes and different prices.
We had a contingency.
And then there's a contingency. So we haven't fully used the contingency either.
Basically, it's a contingency.
So David, when we get provided a budget from an engineer for a concrete restoration project, it's pretty much an estimate, right? Because they can't inspect the whole building first and say, okay, you're going to have this many square feet of stucco. They may inspect 10% of the building and then extrapolate those numbers to come up with how much estimated repairs they have. So the concrete restoration budget was really an estimate, right? And then I believe there was a contingency budgeted for it as well.
Okay, I appreciate it. Thank you. I just wanted to know, and I like the fact that the budget always seems to be overshooting it, but not by a ton. So we're not like overcharging, but at the same time, we're very close, but still have a little bit left on top. So that's nice.
Yeah,
Nice to hear that.
that's a good way of summarizing it. We're fairly close, and we have a bit of latitude there in terms of transferring some of this money to other projects at the end of the day. So the middle block there is what we have in SERS. We ended last year at 3.7 million. We added 1.68 this year, and that is really made up of 3 items. Reserve additions and the monthly maintenance fees were 1.6. The interest income was almost 200,000. And I mentioned 248 before. You got to remember that part of the interest income of 248 got allocated to SERS and another portion to non-SERS. So we'll see that the block below. And then we actually spent money against some of the items in SERS of 148,000. So we end the year at 5.4 million cumulative. For non-SERS, started the year at 1.4. We added 269. That was made up of 400,000 in contributions, maintenance fee contributions. Interest was 58,000. And expenses were minus, less 189. So net addition is 269. So we end the year at 1.7 million. So between the 3 accounts, we have 10 million in reserves at the end of 2025. That completes the financial review. Any questions before I move on to Sandra? Okay, thank you.
Sorry, Mike, quick question. Just so I understand that. So we have 10 million right now in reserves, which is phenomenal. I mean, it places us in a good place. What do we do with that money? Does that money just sits dead right now and it's just like being accumulated as we go, or we do something with it?
We invest it. So as you saw before, we have 11 million in cash. So we invest that, and we generated over 250,000 in interest income. It's safe investments. We're not going to go into the market and what have you, but we invest it in the money markets and in interest-bearing vehicles.
I take it we don't invest ourselves. We have a company that invests it for us.
Morgan Stanley.
Okay, so they also take a fee. Okay, fair enough. Just wanted to know. Thank you.
Let's clarify that.
Yeah,
It's not in
there's no fees.
bills.
Yeah,
It's in
the-
T-bills,
It's in
David. It's
T-bills.
not
They're
investment.
treasury bills.
Oh, got it. Okay, okay. I thought it's in actual investments.
No,
Okay,
it's
thank
like
you.
if you go to the bank and you invest in a term deposit, there are no fees on that, right? So,
Yeah, yeah, yeah.
so it's,
Yeah, gotcha. Perfect. Thank you.
okay. So the second thing was a lot of the December numbers were included year-end adjusting entries from the audit from last year, the 2024 audit. So Sandra, I think most of them in there, but I'll ask you to comment on that and see where
Well,
we.
yeah, so those adjusting entries came from the auditor last year, and those were recorded by First Service a few months ago. So that was one thing. So
Okay.
that's typical.
That's done.
And then we had been working, Scott and I, with First Service as well to get the reserves since we switched from, one method over to the method. We had some corrections, and then that finally got corrected in December. So now we're good to go. So I think the financials are pretty close to being in a position to be audited. I think maybe a couple little small things.
Some of those accrued expenses.
Right,
and-
a
yeah.
couple of things we discussed.
Yeah.
So once that's booked, I think we're good to go for the audit.
All right. Well, good work, Sandra and Scott. Thank you for that. Yeah, so the audit adjustments from last year were previously processed, and these adjustments was because we had one reserve account last year, and now we have two, and we had to adjust the interest, make sure it was in the right account, and some of the expenses. All right, and the third item on in this part of the agenda, Scott, was what are the next steps as far as the audit? So, because to me, the financial statements are done now, and
Yep, so Guy has access to all of our monthly financial statements, all the invoices throughout the year, through First Services accounting program that they use. So basically, it's up to him to do what he needs to do, and if there's anything he sees missing or information that he needs, he just reaches out to me and I provide him with it.
Yeah, it's basically confirms and
okay, good. Any timing as to when he's going to finish? Does he usually take a month or a few weeks or?
He usually gets it pretty quick. I mean, it should be finished in March.
Okay, so in March, the owners will have access to the audited financial statements confirming the full year 2025 is the plan. Okay, so that's the first item on the agenda. The second item was related to reserves. Like I said initially, there's been a few emails and good input from owners as far as reserves and the reserve study, I should say, and what we should do. And instead of having an email dialogue and conversation, I put that on the agenda so we can ask Sean and Brooke to comment and provide input and a bit of context around how they see things, because we'd certainly appreciate and want owners' input. And then the finance committee can decide on what the next steps are. So let's take the next 20 minutes to do that, and then leave 10 minutes for other activities, other discussions.
We should slate a workshop for owners as well throughout the time period that we're looking at reserve studies and getting their input.
Sure. Good. We'll talk about that, and that's a good idea. So, Sean, do you want to kick it off and maybe just take a couple of minutes, 2 or 3 minutes, to summarize what your thoughts were in that email and go from there?
Mike asked me to stop by, and I typically don't, like, the dialogue you get into, I really try to avoid it. So a couple of times a year, I'll send it out to the board and say, here's what I think. Please don't respond. Because I'm just giving you an opinion, and, I don't have all the answers, but I feel better now.
And just for your information, Sean, I did send that email or forward that email to the finance committee, so they have it.
But very quickly, what the genesis of it was.
John, if I can just ask you to come a little closer to the mic, because we can't really hear what you're saying. Sorry. I appreciate it. Thank you. I really want to hear what you have to say.
I'll go in my seat.
This is by the way, Sean, this is a privileged seat at the table. So.
Here.
Welcome to the finance committee.
Go to the finance committee.
Now, the genesis was, Scott's put everything up on Building Link, and I happened to see that the bids were in for the cooling towers and the risers. and they were ranging from 5 to 7 million. And I saw the reserve study had indicated a cost range of about 3.3 for the combined projects. And the reserve study indicated that there was 7 years of useful life on the cooling towers. I was formerly treasurer and vice president for a couple of years, and I got out of the game, which I'm happy I did. But I recall the 2015 reserve study that stuck in my mind, where it said we had 21 years of useful life on the roof, which means we don't replace it till 2036. So the point to the board was there are challenges with reserve studies. You need them, they're important. That's how you set your reserves, but it's not how you run your business. It's not how you run your projects. It's a study. The engineers do the study, you pay them to do the study, and they do their best. The second point that I was trying to make, which surprised me, was throughout there, the estimates were estimates by management, estimate by the client, we're paying you. You give us your estimate. You have tables, you have things you work with, you have standards. We shouldn't be, there's a way to do that. And I'm going to talk a little bit about that in my view. There's a way you can have input, but that study is how you set reserves. All it is with a pool is projection of cash flows over like 25 years, looking for pitch points where you go negative. And it sets your reserve. And that's statutorily what you have to do. And you should keep that pure. That the engineer does it, that's how we set reserves. Not how you manage your projects. So my point was associated reserves is very good. I'm not defaming anybody. We're recorded. It's my opinion. We've used them quite a few times. But this is not the first time we've seen this. I would just call it sloppiness, or, I'm aware of an association where they took their insurance expense, put it in the reserve for a year, lowered the reserve, requirement, took it out afterwards, and the engineering firm or the reserve study gave them a report including the insurance expense. So there are reserve people who will let you get a smaller number. You don't want that. But if we're coming up with another study, have somebody else take a look. Reserve Advisors is good. There's other ones. I still think you probably stick with associated reserves, but they typically come in and say, if someone's new, they want 15 grand. They do a renewal, they'll say 10. Oh, if we do like just an update, we'll do 5. No, pay them to do the thing, top to bottom, their opinion, stay out of it. Then when they finish up, then you can kind of do your little work. I think most importantly, getting back to my next comment will be, they have packages. They have software packages. We purchased it. I was the treasurer. We never got it from Associated Reserves. We never got the package. I kept fighting for it. And that enables you to do your own cash flow analysis. Best practices would be you get the reserve study every 3 years, because 1 year is not fair to the current owners, 5 years not fair to future owners. And you do your own projection when you set your budget. You set that reserve number at 2 million, but you want to know if that's enough or not. Maybe it's too much, maybe it's too little. And if you're doing your own cash flow projection, you see it banging up, maybe you put another 100,000 in. And when you take that cash flow projection, that's when you go through the reserve study and you say, that's wrong. We don't agree with that. Numbers should be higher. That's when you make those adjustments. But my point is, don't get the client involved and mess up their work. Let them do their work. And then on the back end, do your own cash flows, do your own assessments. Because that study, it's not going to include your engineering fees. It's not going to include your project manager fees. It may or may not be enough for inflation. But there are issues with reserve studies. And, this committee has more expertise than we ever had, which is why I never come to meetings. And the last thing you need is too many people at the table. But when I saw that one thing, Esky, the 5 to 7 million when there's only 3 in the budget. And then I said, oh God, they said there were 7 years useful life. I said, let me just write a board a note and say, you got to really, don't just go give it to Associated Reserves. Make sure you understand what you're getting and stop feeding them numbers. A lot of this stuff our prior management probably gave them. Mm-hmm. The roof, that number in the roof, we got assessed for the roof. And I know you had the engineers do the work. The reserve study said number provided by management. Well, what the hell? Mm-hmm. It's like,
Well, this year we're considering bringing in our project managers to walk the building with them. It's a question of, do we want them to generate the final report and then we start dissecting it, or get like our project managers sharp involved from the onset to say, well, nowadays it costs $2.5 million to replace cooling towers, not $1.5 million.
My view would be, only one person, is statutorily, you need to get a reserve study done by a professional company. Let the reserve company do the work. The problem is if you get someone like that in and the project manager working with them, you'll have like a $4 million number. I mean, I would just let the reserve company do the work. And that sets your number. That's what statutorily is required. But you guys, you've got a lot of experience, Sandra.
I mean, the goal is to get as close as possible to what the number should be without being overly conservative and overly aggressive. So that, you're on a.
But if we hire someone, management shouldn't be giving them the numbers. I don't care. Even if we think we got a better number.
But to me, it's like, if you're not gonna use the study, it becomes kind of pointless. And if the study says 2 million and you say, no, we know it's wrong, we're gonna do 2.3, then it's harder to, I think you want to get as close as possible to what it is every 3 years.
You need some document that statutorily proves you did your diligence.
Right, correct.
So someone's gonna give a study, it's gotta be authorized
Well,
first.
but then,
If I could say something also, sorry. I think that everything you guys are raising is phenomenal, but I think that we have someone sitting around the table, Scott, First Service, which have been phenomenal so far. They know more buildings and more projects and more materials coming in than we would ever know, and more than any of our project managers or any of those would ever know. If First Service can kick in and really show us their value coming in, showing us how long roofs on average lasts between older buildings in South Florida under certain conditions, we can get phenomenal data right there. I mean, that alone could probably pinpoint us exactly on the price that we need to charge or pay or whatever it is.
Okay, guys, we're kind of getting a bit ahead of ourselves because I wanted to solicit input from Sean and Brooke. So this is exactly the type of discussion we should have, but let's, do you have anything else to add?
No, the only other thing I would suggest, and I tried to do this on a couple of occasions in my prior life, wasn't successful before Heskey was involved, so he's not part of it, is you're talking investments, you're talking reserves. Try to set a policy that lives when the next board comes in or the next group of people that are here. So people will follow it and take the benefit of all the work you've done, because it seems like all of a sudden it goes away and there's no policy documents. And some people involved in corporations, there's always a policy document,
Okay, great, thanks. So before we embark on the general discussion and look at some of those things that David brought up, Heskey and the others, Brooke, I'll ask you to share your ideas on the topic, and please try to do it within less than 5 minutes.
Well, I wish I would have had an opportunity to talk to Sean about this a little bit beforehand.
You can speak to him anytime, because this is not the end all and be all meeting either. So we're just introducing the topic, but there's opportunities to engage with owners and others in the process here.
Sure. I'll say a couple of things. Is one of the things I shared with Mike was something that Becker had put together on their website. And one of the things it does, where Sean and I do agree, is that ultimately, under the state of Florida, there are 2 organizations that certify reserve studies, and we're going to need somebody who is certified by them. Sean and I agree on that. Since these meetings are recorded, I feel comfortable reminding folks that at the last meeting, Todd had sort of agreed with me that the current reserve studies was really poorly done. And I think one of the areas that I thought was really poorly done was the reliance on management. And I guess what I also heard at the meeting last night was that there are a lot of people like myself who were disappointed that our fees didn't go down. And given that we're in this situation where there is a group of people who really would like their fees to go down, I think that if we can get this thing to be as accurate and precise as possible, so there might be the possibility that our fees could go down, that would be a good thing. And I think that if we do Sean's approach, which is you say, hey, reserve study folks, we're going to have a conversation with you about where we think you went wrong, but we're going to turn the thing over to you, and hopefully you'll do it right. I don't think we're going to get the same level of accuracy and precision as we could if we had more involvement. I also have not been very impressed with Sharp, and I would be hesitant to use them. It also brings up the issue of the certification with using them. One of the things that I also shared with Mike and a group of others, and I would have done it broader, but I know some people don't want emails from me. And was that I started with the Becker blog, then I went to the actual organizations that have this certification, in part because I was curious if I qualified for it. And so I noticed on one site that they highly recommended that in tandem with reserves, we do maintenance, which is something that both Vince and I agree on. Vince and I actually wrote up our own little reserve study piece for the swimming pool, where we projected out the capital expenses that fit our organization and the location and maintenance. And so I think it was a strong document, and I would have liked it to have been incorporated in the reserve study. And if we had the software that Sean described that we should have had, we could have actually done that in-house and perhaps got some better numbers. Where I think the big pitfall is that there are some items that are discretionary. And for example, the Westin in New Orleans, they remake themselves quite frequently before their finishes die, before the carpets die, before the furniture dies, because they like to keep a modern look, and that's what their clientele wants, and the cash flow works for them. So they remake that hotel. I'm always surprised that this beautiful thing's gone and another beautiful thing is back. And I think that is the element that I see as having our greatest deficiency in that I didn't have time to review this today, but vaguely remembering looking at this before, I looked at like when they had our tiles in the hallway by the elevators on like floors 2 to 29 being replaced, and I was like, that seems a lot more frequent than I would have put. And a product like tile, if you go to Roman Pompeii, it's still looking fairly good for a couple thousand years, and certainly over the lifetime of our reserve studies, the tile will last long. So my point being is that for an item like the tile, the lobby, the ocean lounge and things, that is something where if we're really going to try to fine-tune where we want to be in life, we need the homeowner involvement is going to get it. And the way we could do that is if we were to identify those areas and get a team of homeowners and say, hey, what the general, and not that this thing can't, to use a word that Barbara has often used, is that these are living documents, and I agree with her that there are a lot of documents that should be living. What I don't know is how we get input to make them living. And so can
you wrap it up in the next minute or so? Because I'd like to leave some time for discussion on your points and others.
That's my thing, is that I my approach is different than Sean, and my last point is going to be is that when I went to these organizations that do the certification, it is perfectly acceptable to use client input, but what I think right now the big deficiency is that where they have used client input, it's wrong, because they have us redoing a lobby renovation like we did our recent lobby renovation. Like they have like 1.7 million happening every 15 years or 20 years, and I don't think we're going to have that big of a renovation in 15 and 20 years, because a lot of what happened just reflected the fact that lifestyles changed so much in the last 50 years and ADA codes. And my experience is that the ADA business isn't forcing people to do that major of a thing. There are a lot of grandfathering. And so that's my thing, is that I agree with Todd, I agree with Sean, is that right now it sucks. And I guess we have two roads, well, there are a couple of roads, but the two primary roads that I see is, just totally hands off, and we accept this large margin of error. We try to fine tune it for homeowners who'd like to see costs go down, and I think if we corrected some of these things, we could. Or the task that it sounds like the board committed to, based on what I heard in the last meeting, where I thought it was stated that it was decided that they were going to have Sharp be more involved, and I just don't think Sharp has the technical expertise for building envelopes, for mechanical, for plumbing. And so, respecting your comment, to wrap it up, there it is, Mike. And what I would almost suggest is maybe we have a group of people meet in 2 weeks who want to talk about this further, because I think it's really an hour and a half discussion, and I'm certainly willing to go talk to Sean or whoever else would enjoy my company offline.
It's a discussion that warrants a lot of time to be spent on it, and the more time you spend on it, the better the result will be at the end of the day.
And by the way, I'm willing to share my resume and stuff, and I actually used to do the building envelope piece for condominium boards in 2001 to 2003. So by means of having done those, and I've updated them for other things, clients. And quite frankly, again, the Becker, one of the things we should be mindful of is my reading of the Becker blog thing, right, is that when we complete capital projects, we're also supposed to update it. Thank you.
All right. Thanks, Brooke. Thanks for your input. And so now let's, you guys have seen some of the information you've heard. There's different approaches we can take, and I'm curious to hear what your thoughts are on it. Katina?
We're doing a reserve study. I think the company that we hire should have the capability to tell us, at least on the major mechanicals of the building and safety and updates, should be able to tell us what they are, guesstimate how close they're going to cost, because I assume they're doing that for all the buildings as a basis. Now, if we want to do cosmetic things, then I think the input of the owners is very important. And we can make a decision if we change the carpet in 10 years or 15 years, or the tile in 10 years or 15 years. Those are not mandatory, but they are elective. So the mandatory ones, I think, that first we need to work with the company and get a good input from them. And if they're not giving us a good input, we need to look at a different company. That's my view.
Good point. And I just have a follow-up question on that. Do we need a reserve study both for SERS and non-SERS?
Yeah, they do.
Yes. I mean,
They do both, but from a legislative point of view, do we need
it's
both?
really the
Yes.
SERS you have to fund.
SERS, you have to fund, so you need a study, but.
Right.
Unsaid.
The non-serious is what's gonna get you. And because.
No, but that one, the point I'm trying to make, to Katina's point, is we can estimate a lot lot of things there, because those are more cosmetic. We can decide.
Except for the
cooling
towers.
towers.
Okay.
Or in the non.
Right, and VDA wasn't even mentioned in the reserve study as far as I can recall, whether it be Sears or non-Sears.
Yeah, the problem we have now is the cooling towers comes out of non-series. Like,
Yeah.
And what happens is, all of a sudden you wake up one day, we have had this discussion before, you're like looking at this, you're like, well, wait. And my first time, was the elevators aren't in this, it's like, that was really kind of hard. And then, when the law came out, I was shocked that even the non-Sears, all that stuff, we were just talking about the cosmetics, the pool, all that stuff still has to be in the budget somewhere.
Right.
Okay,
Right,
and Pam, you had a suggestion as far as maybe a working group to look at this? Or?
A working group or workshop, if you want to get owners' involvement. The other thing is we have to say, whoever we contract with, they have to have a realistic view of what things cost, as well as the projected cost of income increase. Because right now, if you take a look at some of our reserve studies, which we have in the past, and we say, okay, this project's supposed to cost hypothetically $1 million. Well, we got all the quotes, it's $2 million. I mean, they shouldn't be off that much.
Well, when you get into the cosmetic side of it, like interiors or elevators and the flooring and things in their building and the paint colors and things like that, it's subjective to
Right.
everybody. So, the workshop would be good, but, somehow you have to go in with some type of definition, because you don't want it to become a circus of, people saying, oh, I don't want to spend the money. Other people saying, oh, we got to do
Maybe,
this.
maybe it's a survey. Maybe we pick the 5 to 10 items. How often, when should we redo the lobby? In 10 years, 15, 20, check. And then no, but I mean, then you let the owners decide and, I don't know. I mean, or
I wouldn't recommending increasing the life expectancy
right.
of anything. If they say carpet, change it every 10 years,
That's way too long.
I would
Yeah.
keep it that as the max. And if this building wants to be, well, we don't want 10-year-old carpet, we want to change it every 5 years, then yes,
That's
lower,
good
but
choice.
don't ever
Yeah.
increase the life expectancy.
But now that we're on pooled reserves, we have a lot of flexibility. Before, everything was every component was itemized, so the $500,000 you had earmarked for hallways just meant that you had to spend it on hallways. Right now, the calculations they do, just a ballpark figure of how much should we fund as reserve. It's not like, we're not committed to spending any money anywhere. It's just, they're doing a quick calculation. And it's also a guideline for us to know, like when we're proposing a budget, to say the recommended amount is this much and the minimum amount is this much. What do you want to go with, for the non-series, the recommended or the minimum amount? So, we need the baseline, and it's got to be accurate as possible.
But the baseline has to come from professionals.
Yes.
Right. Right.
The reserve study, the baseline comes from the reserve study.
What I hear, and there's a lot of good discussion, a lot of good suggestions here, but to sum it up, we get the baseline by professionals, and then we have a lot of expertise at this table. First services, there was a suggestion that you guys, you have a lot of information, access to a lot of buildings, so certainly we value that input. And then the owners, last but not least, the owners, and then we'll reconvene and have a workshop and say, hey, here's all the raw material. How do we mold this into what we want, really at the end of the day? So that seems to be and again, I guess we don't have to rush into it, but we'd like to have this done by the budget exercise for 2027.
Definitely.
Yeah, August, September timeframe. So if we backtrack, then we got to start moving on it.
If you're gonna do a workshop, I would suggest that, you really lay it out. Like what you're gonna detail so that people have a chance to think about
Right.
it ahead of time.
Yeah.
And I wouldn't do that until after the reserve study, because then you can dissect it and then they can know what's going on, not prior to.
Yeah.
When you get the reserve study back and you say, okay, let's go line item by line item or detail. Yeah,
Before
Right.
finalizing.
yeah. Just so we all get an input, so we all feel like we have an input.
Yeah.
Like we all say, okay, replacement of carpetings, we recommend on the reserve study 20 years. Okay, well, maybe we could push it. Well, let's not even look at that because it's too far in advance.
Right.
Yeah, but like coming
Can I-
up with
can I
all
share-
projects, we're definitely gonna need to do a reserve study to update everything.
Have to, yeah.
And so in about 6 or 7 months, the roofing's gonna be done. We're gonna close out the elevator contracts. We're gonna be, well along the way on the ELSS projects. And they can do more up to date.
More up to date, yeah.
But brings us to one thing, is the B&G committee. So we know that the hallways are gonna get trashed between the sprinkle work, the alarm work, the BDA and the HVAC risers. So forget about those hallways. So we should resurrect our B&G committee.
We had it on our agenda, but there was nowhere we could go with it because we knew at the time last year that we had to replace the carpeting after all this was done. We knew that. And it was just common sense that they were gonna ruin everything there and have to paint. So, you know, we should probably start working on it now. Someone
Yeah.
can come in.
Yeah, but
Well,
what did
the-
Donna
so-
do? Donna said the B and G committee shouldn't really get involved in projects over $50,000.
So the way it works is, and Scott, correct me if I'm wrong, the president is our administrator and our president is the one that, sets up, you know, what committees we're gonna have. And so, you know, this year, I was thinking about it actually today. So if I make it back on the board, you know, one thing I'm gonna suggest, and it shouldn't, I wanna be sure that if, like, for example, if I chair it, I would like to have a cross-section of people, not just a certain group of people. Because when I had the B and G committee last year, I had 9 folks. Everybody was different. And it was nice because everybody came with a talent and everybody, you know, had, you know, pretty good ideas that we could work with. And then we honed them from there. So, yeah, B and G versus beautification design, because beautification design, that is a very small, you know, subjective type thing. So you get, you know, this committee works and they give you 3 samples and then you vote on it, right? Where B and G runs differently. You know, B and G runs with everybody coming together like a think tank. And okay, what are we going to do here? Let's look at the picture. Do we have a 5-year cycle on this carpet? Do we have a 5-year cycle on the painting? Does anyone know how long the carpet's been in now?
Yes,
It's been a long time.
no, it's, let's
On
see,
the
I've
floor?
been here, hold on. It was 3 years, but it was 15.
Yeah, I want to say it's
10
been
years.
a long time, yeah.
And so,
Wow.
and I just saw this carpet in a building, in a very old building, and I was like, oh my God, it still looks terrible. You know, I was like, hallways are just too dark for me, but, you know, it's just me, but that's why you want, you know, different folks from, you know, that can give you, because there's lots of other things that B and G can work on, you know, that,
So Barbara, you're up for election, Husky's up for reelection, Bill is as well. I would say, and the president decides which committees to have. The recommendation, well, hold on, the recommendation from this committee is that we should have some form of building and grounds. Not too many committees, we don't need beautification, that could be handled. So if you guys can push for that, and maybe one of you guys will be the president, we'll see.
yeah. See it there.
So the recommendation from this committee is, hey, we'd like to provide input there on the reserve study, but there's other implications as well. We'd like building and the building and grounds committee to review some of this stuff, so push for that. And we'd like input from the owners, from First Service Residential, and we'll wrap all that up and put it together. So that's,
I have a long idea about building and grounds, because,
I know, you don't have to convince us, so.
The other thing I think we should do is let the owners know now that with doing all of the risers, doing all of the different renovations, doing ELS, what it's actually going to impact. It's how it's going to impact the building and their lives before the project even starts.
yeah, we.
And I don't
did
think
a
we
lot
know
of
that.
Last year, but we need to do more of that. now
Right.
that it's
And I
on
don't
the
think owners know that yet.
Well,
They don't even know what they're gonna do.
when we did our town halls, you know, when we
Right.
did our.
Nobody
workshops,
wants to tell them.
Can I share something on the reserve study and the estimating, because I also spent over a decade doing estimating after Hurricane Katrina, so I've seen quite a bit. And I was looking at Husky's resume 3 days ago and his website, his projects, his apartments, and I'm guessing that when Husky estimates things when they're looking at buying a new building or building a new building, that he uses what's called basis of design estimating, where you're not concerned as to the color of the walls, but you're going to be concerned with, okay, this is the type of quality of the paint. We're not concerned whether we're going to go with the Bahamas that the 25th people are privileged to have, or the Impressionists that the 27th people are privileged to have. But we're going to have an idea that we're going to use this quality of frames, and we're going to look for a generalized commercial art. Or maybe we are going to go, to an auction house and get something higher end based on last night. I don't think that's going to happen. But again, I don't think that you're going to need the level of involvement in this reserve study if we were to self-perform estimates that you need when you're making that decision of, are we going Bahamas, are we going Impressionist, are we going the pierced earring guy on floor 27. I mean, I forget, it's not floor 27, but it doesn't matter because we have quite a few different things there. So I would just keep that in mind, that I'm not saying don't include the homeowners, but what I'm saying is that the people who live in the building are going to have a much, much, much better pulse as to the level of quality than Ryan from Sharp or Tony from the firm. And I agree with Sean that I think we should go back to the company we have now, tell them our disappointments, and depending on which road we could go the Sean road of hands off, and that's great, or we could go the more detailed road. But if we go the more detailed road, we say, hey, we're going to be doing a lot of this groundwork. We want you to write it up. We're going to provide you a good quality basis of design and estimating technique if we're going to do that ourselves. Because one of the things I'd remind you is that Scott, and I feel I can take him on his word, said that he had done an audit of equipment and that they were going to put together a maintenance plan for that equipment. So as they go through that exercise, the building engineer is going to have contact with a lot of the vendors, I would suspect, and manufacturers, and they're going to be able to have, when they say, hey, this is what you're supposed to do every 4 years, they're probably also going to say, and you're probably going to need to replace that in 13 years. So if we have that information, it's great. And somebody else who felt that his advice wasn't being listened to was Vince Croce, and he has a lot of experience in managing buildings, and he had wanted to become more involved in the reserve study process, but he felt, and I hope I'm not misquoting him, but he just felt that if his input wasn't going to be incorporated, he would enjoy other aspects of his life. And so I'll just share that, is that I think that before
that's a big point. He's my neighbor, so when I sit on the balcony and chat with him, I'll bring it up. But thank you. You know what?
And if it wouldn't offend somebody, I wouldn't mind sitting down with Vince Croce, with Sean, myself, and putting together 2 possible forks in the roads to go down. I could even put together Microsoft project schedules, which I'm very adept at, and I own the software. Because
Brooke, I just want to say after what you mentioned is that it's incredible that we have a building with a bunch of guys that sit on a finance committee that no matter what type of a curveball that you throw at them, and they're not sticklers. They're not like, oh, we're only going to do this type of reserve study. They're open to do any type of reserve study, and we're always prepared, which is phenomenal. Good job. Kudos to you guys. And I actually really like that idea that we're open-minded to any other type of reserve study, opening it up, trying to think it up. Phenomenal.
While we're saying kudos, I want to say kudos to Heskey and Scott for their due diligence in being on the elevator company about when that maintenance contract starts and the likes, because that's a great way to save us a little bit money, and I'd like to see us do a little bit more of that type of oversight with Sharp. Thank you.
Brooke, if you want to spearhead that with Sean and Vince.
Not me.
Not you?
One of the reasons I send private notes to the board, I give my.
Okay, well, we have
Other things going on here.
we have Sean's input.
You know,
Right.
happy to chat, have a sidebar and catch up, but not through committees and process. I can't commit to.
Okay, that's fair. Thank you. But we have your input, Sean, so we can distribute that.
I think Brooks made a lot of great points. I'm
Right.
probably not disagree with things he was saying.
All right. So how do we go forward, guys? It sounds to me like we don't have many disconnects here. So let's.
I mean, I think that we need to try to get the studies as close as possible. I'm not sure we want to have separate exercises where we do our thing. It's like we have a study. We should focus on whatever's coming up in the next 5 years. That's the priority. Whatever projects are coming up, we should look at those numbers. We should make sure that that's pretty accurate 20 years from now, I mean, we gotta get many more studies, you know, and try to get this as close to reality as possible and not, you know, have another spreadsheet and another exercise. Here's the study, here's what we fund, and, you know.
Okay, so the first step would be to commission the study, and is that something you can experience?
Scott would be able to help me as well.
Exactly.
Without a doubt, best practices are redo your cash flows every year.
Right. No, definitely.
Yeah.
Keep an eye
Oh, for
on it,
sure.
make sure that there's not something totally like off.
Okay, so Scott can start engaging with the company, and any of you,
I mean,
especially the
Ross,
ones that
our
are here
building
physically,
engineer, maybe our building
our-
engineer can walk.
certainly our building
instead of
engineer should
hiring
be
in-
Sharp.
Hey, Brooke, just so you have some comfort, Sharp will not be involved with the reserve study. I mean, if anything, if we have the reserve study specialist put together a draft, it should go to the engineers that we work with, not with Sharp.
Well, Scott, thank you for saying that. And let me just tell you the one horrible pitfall that I thought of 2 days ago.
Brooke,
What?
I think after this, all you have to say is thank you, and you'll have a wonderful night's sleep.
Now,
That's for
here's
sure.
the horrible pitfall is let's say we pick up our current reserve study and we decide to self-perform items. And so we use their classification system of 003 and 009. And then we say, hey, here's a cheaper company we really like, or whatever. We say we're going to go with this new company and they have a whole different numbering system. Then all of a sudden our work just might be mute because you know it's like migrating a disk. And so that's the one pitfall I'll tell you is that if we do use a different company and I don't know how much standardization there is between how they number these sections. I'm surprised they don't use CSI numbers, and maybe they do and I didn't notice it because I've had some other balls I've been handling. Thank you for your time.
Thanks.
Okay, thanks. So Scott, if you can start the process, get the ball rolling, and anybody else from the finance committee, if you'd like to be involved, just follow up with Scott. That make sense?
Yep.
Okay, we've run out of time. It's 4:11. There was one other item, any other business that came up, but if I can take a few minutes of your time, and not for discussion today, but maybe for at the next meeting. We'd like, as the finance committee, I'm getting feedback that it might be good for the finance committee to oversee some contracts and awards and what have you before they get finalized or signed. So give that some thought, and we'll discuss that at the next meeting, how we go.
We're talking about maintenance contract.
Well, maintenance or project contracts as well, because, you know, we can provide some insight. And like we said earlier, one of the ways to reduce legal fees is for us to provide some preliminary feedback so that the legal review is far more concise and shorter. So,
You think that's a part, like, I'm not used to that system because we usually have the contracts looked at by our attorneys. You know, negotiating, so you would be the first step. I'm just trying to understand.
well, we think we have expertise around this table that can take a stab at that. Yes.
Okay.
So the way we've been doing it is, okay, we get we have an RFP go out, right? And then we get the proposal from the contractors, the board picks the contract. The attorney is writing the contract based off of the numbers, that's specifications that's in.
Well, who
In the
looks at
RFPs.
the terms and conditions from the vendor?
Yeah, so we're talking about, you know, delays with the
Penalties, delays, insurance. Who looks at that?
Yeah, well, the attorneys look at that, but let me pick on TK.
No, well, hold on, but
No,
those could have significant impact on the contract. So if the attorneys are looking at a contract after the selection, excuse me, it's too late.
So remember when we were doing the BDA conversation in B&G? Totally, you were so important in that. So we were having this discussion about the ELSS and the BDA and so we were talking and we were looking at the contracts. Mike was at the meeting, wasn't on the committee, but he was at the meeting. So it was really great because, you know, we were looking at this and Mike says, wait, you don't want to use this vendor because look at what he's quoting. He's quoting, I'm going to make it up for a second, materials from Vietnam, let's say. And you don't want that kind of material. You want this kind of material. And so that's really valuable. So I agree with the, the amount of expertise we have, that if we could get some people to volunteer in their line, of business, like things that they have involvement with, so that they can say, well, this is my experience like you did with us. That really helped. And what the other thing that you just said that the board picks, yes, that's true, but I think to have some more input would be really valuable.
And that's all we're saying. Like in the process, can we express some opinions or review? And then the board or the president or whoever says, okay, I have this contract, it's the lowest price, but I have this one, it's a bit more, but their terms and conditions are far more favorable in terms of penalties, in terms of insurance, in terms of many different aspects. Maybe we'll go with the one that's not the lowest bidder, right?
That's one thing
I'm not sure. Maybe that's being done today, but I'm not sure it is or isn't.
So we have our our stipulated insurance requirements that they have to meet it. Yeah, it's not just them saying this is the insurance we're gonna offer for the project. And then we have the ability to put in the RFP that this is what liquidated damages is gonna be.
No, I know, but if there's one example that's top of mind, it's the elevators. Crike, we should have done a far better job in terms of penalties, in terms of timing, work schedules, competence of people, and what have you. And those were all misses. Sorry to say that, but
But it was a previous
Well,
board.
look at
no, I'm not blaming the board, but that was the board.
I mean, we went with the cheapest contract, and then you get what you pay for.
You have what you pay.
It's also.
Guys, hold on a second. I don't even understand what the discussion is. Somebody, doesn't matter who it is, in the building, part of the residents, obviously looking for our benefit, is willing to do more work for us, is willing to look at more things for us. I don't care what the procedures are. Let them do it.
Good,
Okay.
good for you. I mean, you send it
I'm,
around
I'm
to the
sorry.
deadline. If you have
The fluff and the BS is past at this point. If someone is willing to do work, give them. If Mike is happy to help us, hey, and Mike is an expert, give him.
And it's not only me. I think I'm getting this feedback from others. So
And Mike, I have a question.
We should have the
Have-
opportunity to read the contract. We should.
I'm-
All
Yeah.
all
Yeah.
residents should have the opportunity to read the contract.
Exactly.
Wait.
But you see the deadline.
Okay, right.
Can you get comments by
No, you don't want all the, okay, well, that's,
371 people.
No, we don't want to do that.
no problem. Then the finance committee, it does.
No, but to, let me just say something that I learned. I was on the committee. I wasn't on the board when TKE was picked, but we did all the interviewing and we saw like all the contracts. We had VDA, who was our engineer, guiding us through everything. And, what was interesting was that, to me, like after the fact, because I didn't read the contract, of course, that wasn't part of what we were doing. We did the interviewing. And if you had been there that day to see how people did not want our contract, and Otis came, so they were late, they were not dressed, and they really didn't know our building. I mean, it was a joke. And then we had that new low people, they came and they were like in your face, telling us right now, you got to use us. And then we had TKE come. They were all dressed in suits. They had a professional portfolio they were showing us. They knew all the elevators. If you're going just on presentation, they knocked it out of the park. But the detail that you're talking about, that was left out of the VDA specs was something that we've had to live with. There are some little detailed things with the build out of these elevators that, for however it was done at that time, the review process, whoever reviewed it didn't know that this was missing. Let's put it that way. Maybe VDA missed it, or maybe the prior board wanted to save money and didn't put some things into it. So that type of oversight
Hey, Mike, after we adjourn, can I ask a question to the accountant geeks if you aren't offended by that? And it's a quick question, and I'm
And that's a compliment.
just curious. Well, actually, I have two questions, but probably only one today.
Well, first of
After
all,
you adjourn.
way past our 1 hour, so we can talk all night about this. But if you guys are willing to stay, I'm fine. But if anybody has to leave, then that's fine too. Because
One quick question.
I think we can stop the recording now because the meeting is over, and we just continue on the discussion here.